Hey, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. It is Thursday, June 27th, and you're tuned into On Trend. So today I'm going to go over the difference between a setup and a breakout and how a setup can help you avoid some heartache later on. We're going to show you how to spot potential reversal zones. We're going to find a video gaming stock that is setting up as well as a defense stock. All right, so we're going to start off with SPY, QQQ, and IWM. And 5 days ago, we basically had an overbought condition. You can see SPY here. It had first this big surge, and when it was above 295 after that big up day, it was overbought. And that's the thing that happens. When you get an outsized day after a big advance, it often marks some sort of short-term peak. And you can see that that advance we had with that big surge above 295 marked a peak. And so we had a pullback over the last 4 days. And what that pullback has done is it's pushed 5-day RSI below 50. So we are no longer overbought. In fact, we're even maybe setting up for a short-term bounce because you can see there's the 50-day moving average. There is support from the lows in the early mid part of June. And so we're just above that level and we could get a bounce here. The long-term trend is up. This is a very short-term assessment subject to a lot of noise. You know, we could even have a pullback to this 283, 285 area and still be in an uptrend. All right, but right now this is a spot where we may get our first bounce. Now, if we look at QQQ, we can see that we got a really sharp decline there on Tuesday, and then we firmed on Wednesday, which is basically an inside day. We could mark support here. I'm really preferring to queue off of SPY for signals, and if you want to get a little bit of, say, extra beta or leverage, you can turn to QQQ possibly for trading. But, you know, we were a bit overbought there when we had that move above 188, and now we've alleviated that condition with that dip below 185. So when we look at IWM, we have an interesting dynamic at work here because first of all, the S&P 500 is in bull mode. Okay, no doubt about it. That's my main barometer for the market. And you can see we've got basically 4 down days in a row and 5 black candlesticks. So clearly IWM has become short-term oversold after this decline. You can see RSI is at 31.5, RSI 5, so it's almost oversold. And you can also see we're coming kind of back to this breakout zone. So this is an area to expect a bounce. And if you just go back a few months, you can see in February, there we had 5 days down in a row and 4 black candlesticks. So that was a very sharp decline. And you can see just when you're saying, oh my God, look at the depth of this decline, it's bearish, you get a pretty nice bounce. And then if you look at this long black candlestick that we had here, you can see that, you know, all hell was breaking loose with this decline in March. It was a very sharp decline. It was a lower low, but look at that. We formed a spinning top candlestick and then had one of the best bounces in IWM. Well, the second best bounce of the year. Of course, the first best bounce was there in January and February. But this is a pretty nice bounce, and it occurred after this outsized decline that hit a lower low. So keep in mind, be careful when you're oversold, and the bigger pattern could be a corrective pattern like this falling channel. So right now we're oversold. We don't have a falling channel to work with. Maybe we're at the similar stage as March here, and this may give way to a short-term bounce. Now I want to talk about setups versus breakouts and how if you can find the early bullish catalyst, you can potentially avoid some headache later on. In other words, if you can get a good entry on a setup and you get that pullback after the breakout, you're going to be in a lot better shape than if you were playing the breakout, so to speak. And so I've got 6 charts where I want to illustrate that. And the reason I'm illustrating these 6 charts is because they were highlighted when they were setting up. And it's important. You need to be on these things when they're setting up, not when they've had a big move and they've broken out. That's news, all right? That's already happened. What we need to be is aware of a setup so we can take advantage of that setup when we get our little upside catalyst. Now, before we review the SOXX and ETF, as well as the biotech and the Chinese ETFs, I'd just like to point out, here's what I mean by anticipation and looking for the setup instead of the breakout. Here's on trend from May 30th, and I'm talking about semiconductors and a number of semiconductor stocks. And this is a screenshot of the video. And you can see we were in a potential reversal zone there with that 50 to 62% retracement, and we were oversold. And on the right-hand side of the on-trend page, which is part of the StockCharts video page at YouTube, you can see the other videos. And there's the video for biotech and Chinese stocks. Are they setting up? And I am more interested in setup. So here's what we're looking at with biotechs and IBB. We're setting up, okay? We're in that 50 to 62% retracement zone. We're starting to firm. We've got a wedge line. This is when we need to keep alert for a potential upturn and breakout, or maybe even anticipate. And so now we're going to revisit these and show you what happens if you wait for the breakout. So here's the semiconductor ETF SOXX, and we can see that here is a big zone there. It is basically a potential reversal zone. It's a zone we want to be alert for a potential bounce. And yeah, it's a big zone, but this is the way these things are. There's not an exact level. But we can see this is kind of a resistance level here. This is a support level here. Then we got the 50 to 62% retracement zone. And so we kind of color it all there. We also have the 200-day, which I don't think makes much sense as a support or resistance level for the SOXX because, you know, sometimes it holds, sometimes it doesn't. But the point is, once we got down here in that 170 to 180 area, we needed to be on alert. So we were basically alert from the latter part of May here. And then we started to firm, and there's that initial breakout. All right, so if you're able to act on that first surge, you would have been able to survive this pullback. If you had waited until a move above 190 and a very strong move, all right, it would have been a bit tougher to settle or to hold during this pullback here. And now we've got a bounce, and we have a firm support here, and we say if we close below that low, then we have to reevaluate this bounce in the SOXX. All right, now if we look at biotechs. So we're anticipating here when we start to firm, and then we get this breakout, and that could be the signal. If you wait for this move here when you're above 109 or 108, yeah, you know, then it becomes harder to sit through a pullback. Whereas if you can anticipate and get that breakout when it happens, or even, you know, with this trend line break before we're getting the breakout here, it's a lot easier to sit through. That's why a good entry can give you more patience to let a setup unfold. Whereas a bad entry, it's hard to keep that patience. It weighs on you psychologically. And so now we're getting a pullback. And this is one of the hardest parts of trading and technical analysis is how much or how far do you let the pullback extend? And I can see here that, you know, we got potential support in the 102 area. We've got the breakout zone in the 106 area. So it's kind of a 102, 106 area to watch for support. And you could even do your Fibonacci retracements from here, from that May low to that June high. And that 50% is going to come in around 104. So that's kind of the area you might watch for a potential bounce. But I think the breakout is still here and is still valid and is yet to be negated. If we look at a XBI, we can see a similar setup emerging here. You know, again, you need to be interested in XBI in this late May, early June period when it's firming so you can anticipate and get a better entry. All right, if you're waiting and you're trying to get in at 86, well, now you're at 83.80. It's a little bit hard to sit through. and I'm going to mark first support in that 80-82 area. Then we look at China. All right, China, I'm watching here in late May, all right, when it's in that reversal zone. And then you can see we get this first initial breakout. And we got a little pullback, but then we got another bigger breakout. And if you're playing this bigger breakout, it's going to be harder to sit through any kind of pullback should it occur. But right now there's a breakout there, and China is looking bullish. And by the way, this is the ASHR, which is the China CSI 300 ETF. It's a much broader based ETF than the FXI, which I'll show in a minute here. There it is, in a second actually. There's FXI. But it is holding up better because you can see, whereas, the ASHR held the 50 to 62% retracement zone, FXI moved below it. So clearly ASHR is the stronger of the two overall, I think. So now I want to talk about these alert zones, all right? Because we had an alert zone for the semiconductors, we had an alert zone for biotechs, and we had an alert zone for the Chinese ETFs, especially ASHR. And an alert zone is what I would define as a support area and a retracement area combined. If the 200-day happens to fall in that area, well, okay, fine. But I really don't use the 200-day for support or resistance. But here is Stericycle, all right? And I put on the full quote window, which you can see there at the top so you can understand what Stericycle does. It's industrial waste and disposal services. So it's part of the industrials sector. And you can look at the earnings and PE, and you can see they're negative. But I usually don't pay too much attention to that. And okay, let's face it. The long-term trend does look down for this stock. But what I'm noticing is you've got a big advance here from 35 to almost 60. Huge advance. And we had a gap down, negative, and we declined. But look where we're coming back to. All right, you can see this consolidation zone. You can see the breakout there and then the throwback. So that's a support resistance zone. And you can see it also coincides with the 50 to 62% retracement. So that's a potential zone to be alert for. In other words, put it on your watch list in May there. And now you can see we're firming. We got a lot of firmness in this 45 area, and we've got an early break zone to watch for. If we can break out there, I think that would be bullish for Stericycle. Now the next one is Waters Corp. And this one is a little bit more interesting than Stericycle. All right. And I want to point out, we don't need over-analysis here. We don't need analysis paralysis. All right, you might say, oh my gosh, there's a gap up and a gap down. That's an island reversal. Well, let's try to look at the bigger picture and see what's going on. And what I see is a big resistance zone that is broken. And you can see, classic tenet of technical analysis, broken resistance turns into support. So we've come back to that resistance break zone. So here we've got basically supply, 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 and then boom, we have a breakthrough and demand overpowers supply there with that big breakout. And so this area where demand overpowered supply becomes a new area of demand, the blue zone here. And that is why we are firming. Now, we've also at this 61.8% retracement area, we kind of overshot the 50%, but again, keep in mind, we're not pinpointing retracements, we're using zones. And basically, I'm looking at this as 2 big steps forward, 1 step backward, and more importantly, the present, what's happening now, we're showing signs of firming in that 200, 210 area and slowly trying to get a breakout here. So we've got a reversal alert zone. We've got firming in that zone, and we're showing the early signs of a breakout in Waters Corp, which is in one of the stronger sectors, healthcare, and it's also medical equipment, which is one of the stronger groups. So as noted, whenever I've got a group of stocks that belong together, I like to create a chart list so I can see how they are playing out against each other, or to see if the group is strong as a whole. Now, this group I'm showing here is basically video game stocks, and it's a pretty small niche group. Now, as far as sectors are concerned, Activision Blizzard, Electronic Arts, and Take-Two, well, they're listed in the communication services sector. And I think it's kind of a joke because I don't see them competing with, say, Comcast or Netflix or Google. Well, yeah, they are competing with Google and Microsoft, especially. Microsoft is developing games. I'm not including Google and Microsoft because they're huge companies and gaming is just a small sliver of their operations. Whereas you look at these stocks here, these 5 stocks, gaming is a bigger part of their slice of the pie, the revenue slice, so to speak. Maybe Tencent has the smallest slice. That is a Chinese stock. Nintendo is, of course, Japanese. I'm mainly focused on the 3 US-based gaming stocks. And the reason I'm showing them all together is because I'm going to focus on one, because I was scrolling through the charts and one of these caught my interest. And whenever one stock catches my interest, I always try to look at the sector, the industry group, and some of the other stocks to see if there's something bigger going on. Now, sometimes there's not anything bigger going on. Sometimes it's just an individual play. So when I've got these in a chart list, I can view summary format here. And once I've got summary format, I can compare performance. So this is intraday, but I'm going to go to 3-month performance. And I will close that window just a little bit so you can see it. Okay, and there we can see the leaders over the last 3 months. Well, Electronic Arts is the worst performing over the last 3 months. Take-Two is the best performing. And I'm going to switch this out to year to date. And year to date, we can see Electronic Arts is up 23.33%. That's a big advance. It's more than the S&P 500. So year to date, Electronic Arts is outperforming the S&P 500. But you know what? At the end of the day, it's the chart that matters, the price chart. And so I can go here and I can do 10 per page, and I can see these charts and perform some analysis here. And usually, it takes me a couple seconds to decide if I want to look at this chart in more detail or I just want to move on to the next one. So I look at Activision Blizzard here and okay, yeah, maybe there's a base working here and maybe it is trying to bottom, but it's below the falling 200-day moving average. I could maybe make the case for a falling channel wedge here and a little breakout working, but it's too early in the game for Activision for me to be interested. And then I look at Electronic Arts, and this one is a little bit more interesting in my book. And that's because it's hit that reversal alert zone, and it firmed a number of times in that reversal alert zone. So basically what you have here is you have this big surge and breakout. All right, first you had a surge, you had a gap down, and then you had a big surge. So that completed the big breakout and the upthrust. You went from 75 to 105. Now that's like a 33% advance. That's a big advance. And then the stock kind of just corrected back, and it corrected. And you can see it hit this reversal alert zone. And I've got 2 Fibonacci retracement tools on this chart. One goes from the December low to the February high, and the other one goes from the February low to the February high. And again, we're not looking for pinpoint areas. We're looking for general areas. But you can see there's the 50 to 62% retracement zone of the February advance. And if we go from December to February, there's the 50 to 62% zone. So there is some overlap here. But it looks like this 90 area. We have resistance and it's turning into support. And what I'm noticing is look at those bounces off this 90 area. A lot of firmness and basing here over the last few months. A potential falling wedge pattern working. We got the surge this week above the wedge line. So you got 100 here as your resistance. And I'm watching, and I think we're going to get a breakout there. And electronic arts could be poised to move. It's also just above its 200-day. Now looking at some of the other stocks, here is Nintendo. It's one of the stronger of these stocks here. There you can see the resistance breakout there. And it's an ADR, so it's going to have this kind of choppy, gappy price action. And then Tencent, not sure what to make of this chart. I mean, I'm looking for charts that make sense to me, all right, that have a continuation pattern at work usually. If you go back up to electronic arts, you know, I don't trade very many patterns. Most patterns I ignore. I ignore 90% of all stocks because they're just not my kind of setups. But if you look at electronic arts, it is my kind of setup. I've been following this setup for years. You know, you get the big surge, you get what looks like a correction in this big falling wedge, you get signs of support, and you get signs of a little uptick or a upside catalyst. And that's what we're getting here with electronic arts. Now I'm seeing some leadership in the defense ETF, ITA, and I've showed this chart before. It's an example of a pattern within a pattern. And so what we have here is we have some resistance, and then you can see some higher lows, so it's an ascending triangle. And within this ascending triangle, you have a little falling wedge. And so you can play the breakout within the triangle. That's the early signal. And you can see if you're playing this breakout here, then you got to sit through that pullback to 205. But now we got another breakout working here. So we're above the February, April, June highs. We got new high or May highs, new highs here in June. And if you look at RSP, it has yet to exceed its spring highs. So by that definition, getting the higher highs, ITA is leading. And so that makes me want to look into that sector and look at the stocks in that group, into that industry group, to see where some setups might be happening. So since there is a defense ETF, ITA, I can go to the iShares website and I can add those stocks to a chart list. So what I've done here is I've created a chart list called StoXX ITA for the symbol for the ETF. And it is an empty chart list right now. And so what I did was I Googled ITA ETF holdings, and there I get a list of potential links. And I want to go to the iShares website. So when I click on that link, I will be taken to the iShares website, and there I can download the components to an Excel file here. Detailed holdings and analytics down there at the bottom left. And so once I do that, I open up Excel. And you don't even have to put these in a comma separated list. All I did was I highlighted that column. So I selected all the stocks. And sometimes you might have some symbols that don't match up. For instance, I know that this one is an A listed stock, and so I need /A in front of it. So I don't want US dollar at the bottom there. So sometimes you have to make some adjustments, but I'm just going to copy the symbols in that column, and I'm going to go back to the website here and go to my chart list, and I'm going to scroll down and I'm going to choose Add Many. And then I'm going to add multiple symbols, and I'm just going to paste what I just copied from Excel, just in a list like that. All right. And then I click Add Charts, and all those symbols will be added to that chart list. So I can look at all of the stocks in the defense ETF ITA. And again, I can go summary format, so I can view performance over a period. Say if we look at 3-month performance, there we can see the leaders there. Lockheed Martin's up there, Wesco Aircraft, I can look at this in candle glance format to scroll through a bunch of charts, which is what I did, and I've selected a handful of charts to focus on. So now we're going to look at 3 stocks that I've singled out within the Defense ETF ITA. And the first one is Curtiss-Wright. And what we can see is Curtiss-Wright had the big surge, and then it fell back. And look where it fell back to. It fell back to the classic reversal alert zone, that 50 to 62% retracement. And then you can see firmed with bounces off this level 4 times in the last few months, and then we had higher highs and a breakout. So it's above its 200-day, and it is moving higher. And if it closes below that low there from June, then I would reevaluate Curtiss-Wright here. Now the next one is Triumph Group. And if we look at this stock here, we can see that there was a huge move from 11 all the way to 23. It more than doubled. Had a pullback and then another big bounce, but then a deep pullback. And it hasn't bounced here in June, which is a bit of a concern, but it's still at a potential reversal zone. Now, I know the 50 to 62% is the zone I've been concentrating on, but you can see here, this is retracement's a little shallower, 38 to 50%. So ideally, this would be the zone, but we're above that zone. So that shows you the buying pressure's coming in a little bit sooner. So we have our first support with a bounce there in March. We bounced here in early June, but fell back. And now we're getting another bounce. So this is the early breakout signal, I think, for Triumph Group. And of course, if it closes below 18, then you have to reevaluate the validity of that breakout. Also notice that on the pullback, RSI did not become oversold. So that is showing you that downside momentum was relatively weak, whereas you can see here downside momentum was strong in October because RSI became oversold. And then Wesco Aircraft. Now this is a low price stock, which means it carries above average risk. So a little more volatility involved here, but we can see a basing process there in that 7.5 to 9 area. And then a very strong breakout with a big surge there above the 200-day and above resistance. Consolidated with what looked like a bull flag, got the bull flag breakout and fell back, but there's a lot of support in this 9.5 to 10 area, and we're starting to bounce off of it. So this might be one to consider as well. And that concludes this edition of On Trend. Thanks very much for tuning in, and remember to stay on the right side of the trend. Have a great day.